While we've got all this optimism about and many holding the view that there's a longer term growth prospect that the investor needs to be buying into at this stage, what are your expectations for the trading week ahead, so on a more short term basis?
Good morning, Alicia. The sentiments are good, and I think they are not off, because looking at the trend also over the past 2 weeks, we see an upward trend. We look at the indices on the stock exchange; they have both improved. We've had the all share index gain its support of 100 points, and we also have the 20 share index actually at 4,600 points, which was actually anticipated earlier on this year. So looking forward, I would say if there's a time to invest, it would be to get in now when the stocks are much discounted than they would be in future.
Of course, there are many companies stealing headlines at the moment. So let's take a look at a few of those. We've seen Kenya Airways managing to avert strike action, which was scheduled to have begun tomorrow. What are you making of that news, and how do you see the market reading this? Because for now, it is just short-term relief.
In a market like Kenya's, whereby most of these stocks are moved by investor sentiment and a lot of public perception, this may have an impact, especially with Kenya Airways, which has been a spiky stock on the bourse. We always have it moved by public sentiment. Having the strike called off is actually a temporary reprieve for the company, but looking forward, I think the issue is bigger than we are actually making it out to be, and eventually the company may have to honor the agreement they had last year in August to compensate their staff and appraise their pay. So looking at the stocks again at 43 shillings 45, I think Kenya Airways is undervalued. The fair value of that stock should be much higher, in the tune of the 60s. So for anyone looking to invest, I would say buy in now and maybe cash in later.
In the meantime, we had Athi River Mining giving up 2.8% by the close of yesterday's session. It's sitting now at 168 shillings, and this backed by increased profit taking from investors. We've had the company since come out with the news that it plans to spin off its fertilizer business to focus on increasing cement sales. What are you making of that strategy? Because the whole selling point behind Athi River Mining was to a large extent the diversification of its business.
I agree with you, Alicia, but looking also at the demarcation of their operations, we have the fertilizer operations maybe contribute to about 5%, 5 to 6% of their total revenue. We have a bigger bulk of what they make every year from the cement manufacturing. And looking at the industry they find themselves in, they're in a quite competitive industry, one that was recently hit by price wars, which had the major companies reduce their prices. We've also seen some big players like East African Portland, who are also listed on the bourse, have recorded some losses for their financial year. So I think this move by Athi River Mining is very welcome, and I think they are on a clear path to make amends and to hit the competition head on.
So you're viewing this as a positive. At 168 shillings, would you be indulging and buying on the dip?
At 168 shillings, I would buy. Why not? Because we see this stock have a much higher potential. Looking at the fair value, it might be much higher than that. I would say it's in the 200s. We've seen this stock hit 180 plus. So at 168, by all means, it's really a discounted price. And I would say profit take only if maybe you have a substantial gain you made. But looking at the stock right now, I would say it's a buy in the short term, and for the long term, it may be a sell.
Well, looking at another player within that space, Robert, East African Portland Cement, it was the biggest loser on the day yesterday, shedding the 6.8%. It's now sitting at 110 shillings. And of course, this as investors continue to drop the share following worse than expected earnings, which were released last week. How are you viewing East African Portland Cement against Athi River Mining at the moment?
I think the East African Portland Cement have a lot to do. They have a lot to do in terms of restructuring their operations, in terms of restructuring their marketing strategy. They find themselves in a deep hole, in a quagmire of very harsh competition. And with a 200+ million loss, they are really not doing so well. And I think for once we see fundamentals affecting investor perception on the market, and the dip we had from about 124 shillings a month ago to the current 110 is by all means justified. And I'm glad for once that we have investors act on fundamentals rather than emotion.
Well, rising operating costs aside, we've got this company, of course, plagued by a very pricey loan. They say that they've got plans to solve the persistent negative impact of its yen loan, which would be implemented in the second half of the current year. Any details that have emerged on that front?
Not really. I'm not privy to any information on that. They have been very, they've just given a summary of what challenges they had in their business, highlighting that you said of the yen. So we are yet to see a more detailed map forward for how they plan to solve this problem. But again, also looking at the general economy, at a time we find the shilling weakening and we find the dollar also strengthening against most currencies, we may have a question mark on that strategy, and we may also need to have a clearer map of what they plan to do to address this issue.
Of course, on the cost side of things, they are coming to the fore with more concrete plans. The big thing is that it expects a coal-firing facility aimed at cutting its energy costs moving forward. What are you making of that plan and its feasibility in actually meeting some of its targets that are set out there and starting on time?
What the company must tell us, first of all, is okay, yes, indeed, cutting down on energy costs would be welcome in any industrial company. But is this one of the major reasons why they recorded a loss? They must tell us that. And they must also address the issue of competition, which I believe is the major cause of their loss. So I think, yes, energy would save. If they could come up with alternative, cheaper energy, they would save on that. But I think they should tell us what clear way they have of addressing the major challenges they have in their core business, which is cement manufacturing, against their competitors.
Talking about energy, we had Kenyan yesterday increasing 1.4%, that ahead of its full year 2010 results, which are being eagerly anticipated. What are your expectations when it comes to those earnings?
I expect Kenyan to go up above 20 shillings. That is the stock. And I think at the current price of 17 something, it's really undervalued. I think the company is much more worth, the worth is much higher than that. And I look at the results of its counterpart, KPLC, which were really good, same area of business more or less. I expect the results to be good. And I expect the business to improve also in the coming year, looking at the utility sector and the demand for services in this sector. Also looking at the key projects they have begun. We've had them move to clean energy. We've had them get a lot of funding, 24 billion from Japan, to invest in their geothermal output. I think by 2011, when these things realize their full potential, we should see this reflected in the earnings of the company.